Hello and welcome to FRAX in Review. I'm Sam, producer for Flywheel, and today I am joined by Dave.
What's up?
Unfortunately, we have no Kiet this week. He's got some stuff that he's working on, so it's going to be me and Dave for the next 45
I'm
minutes.
really excited for our one-on-one, Sam. I've been waiting for this moment. I know that Kiet gets the alone time with you on FRAX checks sometimes, but finally I get the alone time.
Exactly. Well, we had a lot of alone time at ETH Denver, didn't we?
We did. Yes, we did. Yeah. What were your thoughts on ETH Denver? What are some of your takeaways?
Super high signal. Milady Rave was everything that I expected, and it was really nice to meet Sam.
Yeah. I couldn't agree more. Like, definitely super high signal, especially the event that we threw. That was definitely the highlight for me. Sam's speech, packed to the brim. The only speech I saw overflowing. So good to see excitement about stablecoins in that regard. And yeah, it was just really good keeping up with friends and stuff. ETH Denver is just really a marathon. It's a huge conference. Denver isn't the most forgiving city per se, especially in the winters. It's a very interesting call that they have it there. But you know what I was thinking, Sam? It would be really cool if what if they had the major ETH conference in America in Boston? I think that would be a good city.
Why would Boston be a good city?
I think, super nice layout as a city, like very convenient. Lots of blockchain action going on there, lots of scholarly action. You have the MIT Media Lab there and stuff. So I think it would be a really cool fit.
You know what I have to say about that is I came from Miami and I got off the plane and it was really, really, really cold.
Yeah.
And so while Colorado is great, it's my home state. I don't know how jazzed up I am to go and visit the North in the middle of winter.
Yeah. But people do it. Over 12,000 people showed up. It really says a lot.
I heard more. I heard 25,000 because it's people were saying now the event is so big that there's events outside the event, right? There was the ZKP, there was the Zero Knowledge Conference.
It's
had its own little conference.
2-3 weeks long. The whole thing.
But I think what was most surprising for me was pretty much everybody that we've interviewed on Flywheel was at the conference.
Oh, that was my favorite part. Meeting all the Anons. We met Panda, we met Indigo, we met Scoopy, we met everyone. Napjaner may or may not have been there.
Who's the most surprising? Who do you think is the most surprising of all the Anons to meet?
I wasn't expecting Scoopy.
I'm gonna say Barry because he's fucking jacked.
Oh, Barry! I've met Barry before, so. But the funniest, it was me at our happy hour. It was me, the Curvans guys, and Scoopy. We were just all standing around a garbage can, just talking. It was just really funny in the corner next to the bathroom. We were just, shooting the shit about, stables and, the whole 9 yards.
Well, it was cool to see that the DeFi Trinity is now dead. Long live the DeFi Trinity.
And this should be our first
stablecoin maximalism.
Mm-hmm. Yes, very interesting development in stablecoin land, in Frax land. The DeFi Trinity, I view it as a baby Pokemon. It had its time. It had its time in the wild. It had its battles. It paved its path forward. But now that concept has evolved into a more mature Pokemon as stablecoin maximalist Pokemon.
Yeah, and we've become the incumbent as well too. I saw somebody just asked in chat, right before we started this, are there any other Frax forks that are still having the algorithmic bit now that we've decided to go to 100% CR? And I was like, look, you cannot fork the locked liquidity, you can't fork the curve power, you can't fork the AMOs, you can't fork. I think it was Paulo who came in and said you can't fork the team.
No, you can't.
No. So we've entered into a new realm of stablecoin maximalism.
Oh yeah, for sure. And I couldn't believe how many stablecoins were at ETH Denver. I probably met 6 or 7 different projects, all with a different taste, and different spin on being a stable, whether it was omni-chain or focusing on different VMs. Really cool. Honestly, I'm super impressed with all the stablecoin builders. I really like all of their attitudes. I think they're humbled by the endeavor of building a stablecoin, because it's not like building just any other DeFi project. Not only do you have to be a dev, but you have to be an economist as well. So, and I think Sam's speech for stablecoin maximalism really set the standard of the direction in which stablecoin builders should go. With this two-pronged model, you have the risk-free yield, and then you have the swap facility, and you can measure the success of the stablecoin based on the monetary premium. And if you want to read that article and the whole summary, make sure you go down to the Substack below, subscribe, look at that.
All right, the big news for this week is that Convex has finally gone single-sided staking, meaning that they moved all of their FRAX shares rewards away from the LP, which was FRAX shares and CVX FRAX shares, and they're just putting it towards the CVX FRAX shares pool. So hopefully this brings back the peg, because it actually got quite large. I think it was like 10 or 15%, wasn't it?
Wow, it's quite the arb.
Yeah. So hopefully this can bring it back. I know a lot of people were very up in arms in the Convex community about how much the peg had diverted away, and hopefully this is a good fix that goes. The big news for this week, or the other big news for this week, is that a bunch of assets are getting added to FRaxLand. Most notably in chat, which people were talking about, was ApeCoin being added to FRaxLand.
Oh, I love that move.
Yeah. Additionally, there's also going to be Lido and Maker. And I think there was one else as well too, but the ApeCoin was the one where everybody was like, why are we adding ApeCoin? But on the face of it, it's a very large market cap token. It has a lot of liquidity, and hopefully makes a great addition to FRaxLand.
Not only that, it's like, I think the whole point of these new collateral assets, whether it's ApeCoin, Lido, or Maker, is to reach out to these other communities and show how we are being positive sum and offering a service like, hey, ApeCoin, hey, apes, come over to Frax. You can actually put your ape to work as collateral on FRaxLand. It gives them, a new option. It's a very smart strategy. It's inviting these different communities into the Frax ecosystem, because, even Lido 2, even Maker 2, I'm sure there's people that have been Frax curious. And so now this gives them, an excuse to dip their toes in FRaxLand. So,
that would be great. Yeah.
Yeah.
I actually brought up another question in chat this week about when are we going to see all the FrxETH pairs added to FRaxLand? So this would be like a WBTC FrxETH or
I was thinking about that.
Yeah.
And my response is, I think the monetary premium of FrxETH needs to increase to healthy levels before we can consider having the ability to borrow FrxETH, because you want to have a lot in circulation and a diverse range of how FrxETH is being utilized, whether it's being held, whether it's earning rewards outside of the standard Curve LP and sFrxETH. You want to increase that monetary premium before you borrow against FrxETH. What are your thoughts?
I think we're already there. I mean, I've been waiting for look, I know we're being very conservative with FrxETH at the moment. If Sam just wanted to turn on Degen mode, they would add a stake FrxETH as collateral with a FrxETH borrow, and just let everybody go to town, and that would be insane, because then you start to get the wrapping, and that's one of the reasons that
you had to look at the timing in the market, especially today. It dumped 7%. It dumped 7. It dumps.
Yeah, but you're borrowing. Sorry, your collateral is stake FrxETH, and then you're borrowing FrxETH, right? And then you're wrapping it over and over again, 10x, so you can boost your stake FrxETH yield to go very high. I think the big brain move would be to stake FrxETH as the collateral base, and then borrowing asset would be stETH. That way you could essentially short stETH and leverage up your stake FrxETH.
That's the violent move right there.
But I think it's coming. I've read a couple of papers that say that lending markets are the best way to stabilize the peg, because they incentivize more borrowing. That borrowing goes out and it creates more liquidity, and also it locks up that FrxETH so it can't be used. So I'm looking forward to it. We'll see it when it comes, and I'm sure the team is keeping an eye on it. So moving on, another thing that happened this week was Arthur Hayes posted a new blog article, and essentially talked about this coin, which you call Naka USD or Naka coin or something. And essentially he said that we should be able to take all the ETH and then short it using perpetuals in different exchanges, and then create dollars out of that. And what I found funny was that I had proposed this back in 2021 as a hedge AMO. Like once DYDX came out, and didn't really work at the time because there's no real way to trustlessly short ETH at scale. Like DYDX uses like stables to do all of its trading, but maybe there's a solution that will come soon that would allow FRAX to take all of its stake FrxETH or staked ETH or something, and then short it, and then allow people to generate dollars from it.
Yeah. So you predicted your article like predated Arthur Hayes. That must be like a nice seal of approval there.
Yeah, it was right around the time that it just made sense where it was like you have a short asset and you have a long asset, you put together, you can make $1.
Isn't that UXD?
Yeah, it is UXD on Solana, but we just don't have any on ETH. There's no perpetual exchanges that act like UXD. So
yeah, I don't know how affordable it is to have it on ETH with the gas fees. Like maybe you can have it on like an L2. Maybe you can have it on Polygon, but
but there's security considerations at that point, and we all know how much the FRAX team enjoys being purely ETH based.
Yeah, that's true. So I don't see that happening anytime soon, unless maybe there's a FRAX chain in the future that's super cheap and they can do those strategies on there.
Yeah, there was another article that I read where if you think about what like a FRAX chain should do, it should allow for like essentially what Silvergate Exchange Network was doing, right? Where you essentially create this network where people can transact dollars for free, like just free transactions for FRAX on the network. And they don't pay any fees, and they have all the security guarantees of ETH. And people just like the monetary premium grows there as people like trade back and forth. And you would expect people to keep a lot of FRAX in those wallets at that point. And then like all the collateral is kept by FRAX, who then can deploy it in different things.
Yeah, like it's the more FRAX that gets sent around and transacted, the more naturally people are going to have in their addresses and in their wallets. So, that's going to be really interesting to see like what happens with a FRAX chain. But I feel like it's just so far out. Like, let's just get to on-chain governance first. Let's just get to hopefully, I guess like some alpha I can share here is the interview I did with Sam. The 2 issues he talks about were, on-chain governance, and we delved in a little bit on regulation. The 2 points that I remember from the interview I did for him, which hopefully will be out soon. We just had some technical difficulties, and that's why it didn't go out yesterday. But it's going to be a optimistic format for governance, it sounds like. 6 of 9, and and in terms of regulation, Sam talks about this concept. I call it this concept that really resonated with me, called American optimism. There's always been frontier tech that has shown up in America, whether it's radio, film, the telephone, the internet, railroads. America does a good job of figuring this stuff out. America has a track record of figuring this stuff out up until the internet. And so, with this track record, you would think that America would, not fumble the bag here. But thinking about it, though, semiconductors kind of went offshore, 5G kind of went offshore. But to be honest, 5G I feel like is a little bit overrated. But I'm not a telecommunications expert. And, the semiconductors seems like more, America did have the lead there, but that was just the evolution of the supply chain. So I think those are like different issues. But point being, for most things that are emerging tech, America usually gets it right. And it would be a real outlier if like America gets it wrong.
Yeah, I read a really good article by Mark Andreessen this week. I don't know if you read this as well, but he was talking about that inflation chart that everybody pulls up where there's like blue lines on the bottom, and it's like TVs and like everything tech. Essentially anything that is captured by tech over the past 40 years has had that deflation. And then he shows everything in red are these like highly regulated markets with like public-private partnerships between the government and the companies that actually run these things. And it's like healthcare and education and everything else. And what he essentially said is that we're essentially moving into 2 economies. One where We have unregulated goods like TVs and everything, which are just going to get cheaper and cheaper and cheaper. Eventually, I'm going to be able to put a TV like all the way across my room for like $100, and the price would just keep going down. It would just get cheaper to make all these goods. On the other hand, we have things like money, like what we're building at FRAX, or anything else that's regulated, where the prices just keep going up and up and up because of the rules and regulations that are imposed by the U.S. government. And so really the battle is going to come down to is like, can we make more markets unregulated so that we can drive the cost down of things? Because like if you go to other places in the world, we don't like healthcare doesn't cost as much in other parts of the world. It's actually cheap.
It's free in Brazil. I experienced that firsthand when I got stitches down there. All I did was show my ID. I did not fill out any forms.
Yeah.
I sound like such a burger right now.
Honestly. I know. But like I lived in Russia for 6 years. I never had insurance, and I was never scared to go to like the hospital. It's only been since I've gotten back to the States that like I have.
I've been reading this book recently called The Master Switch by Tim Wu, and it's all about when these emerging technology appears, like what kind of monopolies form and what happens. And there's a really interesting line in the book when it's like when you come to information, like it's not like you're trying to monopolize to make it more expensive. You're trying to monopolize to make it cheaper, because at the end of it's not just about making money. It's about like having control of the culture and having control of the flow of information. When you get to like information, it's a completely different level. And that's what makes blockchain and crypto so unique, because it's a combination of both information. It's basically property that moves at the speed of light. And so that's what makes it really interesting. And, that's why regulators have had a tricky time to like try to like make rules around it. Cause like, how do you regulate, property that moves at the speed of light? It's like hard to comprehend.
Well, I think Biden just gave the blueprint today when he said that that Bitcoin miners should be taxed 30% on the electricity that they use. So what this means is that the U.S. government is now saying that certain software programs that are undesirable should now be taxed at a higher rate than those which are acceptable. Now, Bitcoin's a really big flashpoint argument, but what happens when it comes to like undesirable AI that runs? Because like AI needs just as much computing power as Bitcoin, right? And probably will need even more as time goes on. And so like this is the model that's going to be used, is like that in the name of climate change, we're going to have to raise taxes on these like AI computer, like your AWS is going to like read all the programs that you're running as you're like running your computer programs, and then it's going to throw in an extra tax bill if it sees you doing something undesirable.
Yeah.
Because that's the only way they can regulate it, right?
Yeah, that sounds like a dystopian nightmare, to be honest.
Yeah. Speaking of dystopian nightmares, right? Our boys over at Bankless really sparked some news this past week.
Oh, with the Lido stuff?
Yeah, with the Lido stuff. So
with great power comes great responsibility.
Yeah. So just this past week, David Hoffman was on, actually last Friday, he was on his show, and like casually just said that like, oh, somebody told me that like a ton of Wells notices have gone out, and Lido was one of them. Instantly spread all over crypto Twitter. Lido came out with a response saying, no, we haven't gotten one. Dave had to walk it back and say like, it was, it wasn't I don't know. He apologized and walked it back. But what I thought was funny, the reason I bring it up, is that inside the chat, a very astute Fraxmalist, Mr. Kmetz or Kmetz.
Kmetz.
He said he was replying to somebody called Michael, who said no one trusts Bankless, and he said a podcast that has only had Sam on once and Michael on 0 times is not going to make it.
Yeah.
Actually, we've had Michael on 0 times, so maybe we're not going to make it.
Well, we haven't asked. Does he do interviews? Michael, if you're like watching this, like come on Flywheel. I'd love to have you on.
Open invitation. Open invitation.
We should really reach out, honestly. We just have, he's just like such a legend. I'm just like,
I know. With Curve USD coming out as well too, it's imperative that we get Michael.
I mean, with Bankless, it's I've been in journalism
I
before.
know.
It's like it's
I
just
know.
it's
Especially when you're that, especially when you're that size as well too. Like,
yeah, it's just you make mistakes, but at the same time, like if you're like that size, it's
yeah,
just even like we have to be careful about stuff. We have to be careful about what we say now. So like you know just because
it's
like of the
tough.
size we're going, it's
It's
hard.
tough.
Like
Yeah.
we're all human at the end of the day, and honestly, like I shout out to David Hoffman because he like really helped me out when we first started Flywheel. Like honestly, like he like walked me through everything and like what I should expect and what to prepare. I think David's a great guy, and I think he just
It's
made
very
a
hardworking.
mistake. I think he's very hardworking. Like used to work with him, and I think he just made a mistake right there. And in terms of, I feel like Bankless, their direction is much more like broad and going retail and bringing like how retail can be like self sovereign on a financial level, and I feel like Flywheel DeFi is helping, like it's more niche and helping individuals become self sovereign at a more utility level.
We're just early in the wave, right? I think
We're
like
early, yeah.
yeah,
We're just young. We're just we're just start. It's been 9 months since we started. We were at our birthday is June 9th. It's March 9th, so we've literally been around for 9 months.
yeah. We like DeFi and the stuff inside of Ethereum really just hasn't had its like big moment yet. We're on it. We're on our way.
Small.
We're gonna
Yeah.
get there. Yeah. Speaking of having their big moment, Metronome announced the launch of their. Okay, hold on. So your name is Metronome, and you're launching a synthetic ETH that is paired against stake FrxETH. What would you call this? Do you think that you would call this maybe ETH?
M
ETH?
MS.
Some meth?
Oh, that's some meth. Literally taking the BTC Maxi joke from 2017. Like, oh, look at these meth heads.
Exactly. Well, that's not the
Yeah.
case. Green Jeff popped into the chat, and we had a little chat about it. I told him that he really missed the ball on this one, and he said legal, just shot it down and would let them do it.
Oh, that'd be so funny. Yeah, I saw that.
How many memes were never come to be now that they
could get so many Heisenberg memes? Oh my
I know.
goodness.
Exactly.
Yeah, I'm about to drop a Heisenberg meme, honestly. Let the man cook. Yeah.
Also dropping bombs was the passing, finally, of the M-stable rage quit.
You hate, yeah.
No, actually, you know what? I walked it back. I saw this tweet from Amin the other day where.
Oh, I saw this one too.
Yeah. I posted in the group. Yeah, like look, coming into it, I was just really annoyed by all the people who came out of the woodwork to say, "Can we unlock FRAX die? Can we unlock this pool? Can we like rage quit out of pretty much everything?" Right?
Mm-hmm.
And it was just annoying because that's not what it's supposed to be for. It's really supposed to be if there's like a failure of the project or if they're winding down. In the case of M-stables,
yeah. So M-stable was winding down. So yeah, it makes sense.
But
I wonder if we could have asked for more. Wait, what were the terms? Did they have to return the FXS or something?
No, it's a 20% hit.
Oh, it's just 20%.
Yeah, 20% hit. So I think it's the right amount. Some people, I saw some analysis that it'll pretty much, if everybody rage quits out, it'll cover the cost of all the FRAX that have been paid out before, maybe a little bit more. So it's probably the right thing to do. The thing that I was talking about with like, for me was for being angry, was really about the rage quit. Right. And so I saw this tweet by Amin that I'm going to pull up here. Let me pull it up here.
Bring it up.
Bringing it up, which I actually thought was really prescient. Amin's very smart, and
that was one of my favorite moments, seeing him at the conference, him showing his privacy pools.
Oh, yeah, it was so cool.
One of the most memorable moments at ETH Denver. What does he say?
Come on. So essentially, he said like another DAO having an existential conversation about the rage quit, which also includes us, Israel too. And he's like, if you don't give people free exit rights, don't be surprised when they get frustrated and make a stink in your DAO. Right? Rage quit is fundamental.
Mm-hmm.
And that got me thinking, because I had said before this, like maybe we should just pass a proposal to ban any future rage quits. And I think that was probably
I was looking for that in the forum before this podcast. I'm like, hey, like where's that ban rage quits proposal? But
I was thinking about it. I was really thinking about it because there's a lot of people coming out of the woodwork for this. But I I think if you have a legitimate reason to rage quit out, that the DAO will actually vote for it, like this case. And the DAO's really smart, right? Everybody voting understands things and knows the situation. So, taking away and fully banning it would probably be the wrong thing to do. And it means usually spot on in these sorts of things. So I trust his judgment.
He knows DAOs.
Yeah, he does know DAOs. So moving on, we have let's see, we have some government stuff as well too. Oh, actually, another thing that I saw at ETH Denver, which is going to be coming soon, is the announcement of Aave's Go, which sounds pretty cool. They referenced FRAX in their Genesis parameters, which was nice. They said this nice thing. I'll pull this up so we can see it. They essentially said, like, we hope to get to the point where FRAX is by hitting that kind of escape
velocity.
Yeah, here we go. I got it right here. Okay, so essentially saying many stables have attempted to reach escape velocity via liquidity. Maybe the winner is FRAX.
Maybe. Maybe.
Just great vibes from Mark there. And looking forwd to seeing Aave Go released soon.
Can't wait for the Go FRAX BP pair. I expect that to be quite juicy.
So let's move on to governance. We already talked about the M-stable rage quit, but there's a couple of FIPs right now that are up for vote, and so a bunch of them are pretty standard. And we will take a look at the snapshot as well too. The thing that we were talking about last week. Remember how we ended last week, and what I kind of alluded to, but
pitch.
Yeah, but we didn't. Yeah, exactly. So one of the things that was surprising was that Pitch had came out and proposed FIP IP1.
Oh yeah,
which was to whitelist Pitch to stake FPIS, and our favorite friend of the show, C2TP. Came out and chose violence and essentially said wrappers are good for unlocking illiquid assets, but in this case, you're just getting around what the actual design intention was for. And what he meant was that this VE locker is nominally different than the original VE locker because this new one has a whitelist feature where DeFi apps can vote or get voted by the DAO to get whitelisted, so that you can actually borrow against your FPIS position and get liquidated, and so that they could like take your stake and like move to somebody else who wants to take on that locked position, which is actually pretty cool. And so you don't really need a liquid wrapper in the same sense that
you would need for the old VE system. Yeah,
exactly right. And I think that's what C2TP said about it, and it looks like the rest of the market is not agreeing with it as well too. I'm guessing C2TP is going to vote against this based on his responses inside the chat. So maybe he just needs to go back to the drawing board and figure out a better way to utilize FPIS as Pitch FPIS.
Yeah.
So moving on from that, we have a couple of FRAX ferries. So FRAX ferry for FPI to go to Arbitrum, Binance Smart Chain or BNB chain, Arbitrum, and BSC. So this is for FPI and FPIS to go to Arbitrum and BNB chain. I don't know why they say BSC here because it's got a different name.
The FRAX ferry shipping across the river.
But you know what? Bridge. Yeah, to our favorite BNB chain exchange, Athena, shout out, where the yields are spicy. Spicy.
No comment
over there. And then lastly, this week, which I think just went up, is increased Fraxland AMO allocation for the stake FrxETH pair. And
this is 30 million? Yeah.
Yeah. Ooh, man, that is a lot.
It's putting a lot of Frax to work. Wow.
I think it'll probably. I think this will surpass the CRV pair soon.
Wow.
Yeah. Well, it should. I mean, it's our native token, and it's the best place to borrow and get leverage on your stake FRAXETH. So
just make it more attractive.
Exactly. I think by the end of let's see, Q2. I think we'll probably in 2 to 3 months we'll have to double this again, up to like 60 or 70 million.
I have a question for you. What assets do you want to see in FRAXland?
I'm going to go with, look, Westwood is right. We should be deploying FRAXland on Arbitrum.
Yeah, so I would say Magic.
Yeah.
Everything
on GMX. Yeah.
Do you know who is a Magic dev?
No.
Mouse dev.
Oh, really? Oh, nice.
Yeah.
Oh, yeah. Great. Interesting.
So, yeah.
But Westwood is right. We need to get on Arbitrum. I know there's a few people there doing some stuff already, but
I think it just matters if they have a Chainlink Oracle. Magic does.
Yes,
that's the might.
Yeah.
So, yeah.
But
I think
if we could add GLP and Magic, and that's a win in itself.
Yeah,
that'd be huge.
GLP, Magic, FXS, FPI.
I'd also like to see all the convex pairs get added, or the LP pairs. Sorry, so you could have like staked convex FRAX base. Wait. It's too long a names, but just everything that's like 5 words long as a convex product added to LP as well too, to provide for more leverage.
That would be something.
Yeah. So covering the last of the governance issues, there's a couple of things that are going on right now. There is the proposal that was put up 3 days ago by C2TP to whitelist convex and staked out contracts, which there must be some. So I think this is. Let me go back. Actually, let's go read C2TP's comment, which he posted. He essentially said, "This is the wrong mentality. Wrappers should be used as an option for making the position liquid, but not just a blatant circumvention of an underlying mechanic. If this is how PitchFX is done, it should be revised as well." So he says, "Staked out uses a time weight mechanic, so the governance weight grows to maturity over a set time frame, and convex has a locking mechanism." So he wants them to leave out their gauge proposal. It was just too confusing for him. So 3 days later, we see FIP 6, where C2TP and Hubert from Staked Out.
It mentions the time weighted Staked Out. Yeah.
Yeah. So I think there's some more variation here. And it's going to create a VE FPIS locker for both platforms.
Oh, we see an alliance.
I know. There is what do you coming back to the rage quit thing? Okay, let me ask you this question. Okay, so Staked Out changed strategies for the FRAX 3 pool that was supported originally, and it has been shifted to other things like the base pool now, and so they're no longer providing yield to these contracts. One of the guys brought up that they should essentially allow for these contracts to be unlocked and moved into the new strategy with Staked Out, which
I don't agree. No, I don't agree with that. I mean, unless the protocol is winding down or if there's a critical bug, you shouldn't unlock the contracts.
Yeah, it'd be interesting to see if the protocol itself could move the liquidity. So let's say the FRAX protocol can move it from like the V1 to the V2 strategies. I'd be open for that, but we'll see. And then I think that's it. There was the FRAX promotion on LA token, which I don't think will pass. And then this is what made me annoyed. Is like we had the FRAX die rage quit pool, which
is that for the gelato pool?
Yes,
that was all me. I got that.
Dave, this is all your fault.
This is all. I'm sorry, everyone. I wanted to get G-Uni onto FRAX, so I mean, people locked. So.
Yeah. 3-year lock.
3-year lock.
But
just think of it as like a bank account.
Yeah. You know what's been surprising, actually, coming back to the convex VEFPIS thing, is that I'm really surprised about the amount of FRAX that's locked in the as VEFPIS.
Mm.
This is something which very surprising to me. Let me see if it'll pull up in Safari. Right, there's 43% of the circulating supply of FPIS, and the FPIS circulating supply right now is like 15 million. So there's about 7% of all. Yeah, so 7% of all FPIS is already locked in the VEFPIS. So another 1.5% is locked in the LP contracts. So that only leaves maybe like what is that, about another 1.5%, which could be locked at this time. So I'm not really sure who is going to actually like lock in the convex and staked out contracts.
If it's already locked, I mean, I'm sure that there's always people that
Yeah,
lock.
I mean, maybe it's that's why the average time lock is so short. It's like 2.2 years, because maybe people are just waiting to move it in. So
4 years is a long time.
I know. So, but look at the lock breakdown, right? There's only 1.49 million FPIS, which is what has like a less than 15-day lock.
Yeah, a lot
right?
of it's pretty long.
Yeah. So over half. So out of that out of the 7 million FPIS that's locked, 3 million is 4-year locked. Another 1.4 million is 2-year locked, and then 800,000 is
the FPIS faithful, led
yeah.
by Sam McCullough.
Happily locked it away. Happily, just everything that Sam puts out, just it's good.
Lock it. Yeah.
It's a FRAX product. It's gonna be great.
Yeah.
But yeah, so that's gonna. Anything else that you want to discuss? Was there any like Twitter threads or other stuff that was interesting this week?
No, I think you covered everything. To be honest, like lots of action happening today.
Yeah.
In terms on both the regulatory front and with Silvergate, which has been, Silvergate could have been a lot worse.
Yeah.
Could have been a lot worse. You got like, now you have this like orderly wind down. And then, what was interesting to me today was when the New York Attorney General went out against KuCoin, calling them an unregistered securities exchange, and grouped Ethereum with Luna and UST, calling them securities. Like, these regulators are really, taking a very broad,
Yeah.
definition of everything. So, it's yeah. Go ahead.
I mean, this is the article that I'm going to write tonight is about why FRAX will. I understand why now FRAX will never embrace RWAs, and it's the same reason that brought down Silvergate, where Silvergate didn't crash because it was crypto bank. Silvergate crashed because of their. Okay, so when you're the way it works when you're a bank is you take in deposits, and you can invest those deposits on leverage up to about 10x. And so Silvergate got a huge amount of capital pre collapse. I think about $18 billion. And they went out and they invested into a lot of treasuries, mostly long dated. If you look at what they're investing in, right? So they're buying like 30-year mortgages and like 15-year mortgages and stuff, like really long dated stuff when rates were in like the 2% for like a 30-year, right? Or 3%. And then in the course of a year, rates skyrocket. If anybody that's trying to buy a house now will see that, like, you're paying 7% for a mortgage right now. It's the same thing. And for banks, we're like, okay, they have all these long dated securities. If they hold them until the end, the like 15 or 30 years, they're great. It'll pay out. They won't have any liquidity issues. But when you have a 90% drawdown in your deposit accounts of everybody just getting out of crypto at the same time, which they were able to successfully do, it means that they incurred about $900 million in realized losses by selling their bond portfolio just too early. And you look at the crypto banks, and it's a problem of duration mismatch. And you're seeing that now. I think Silicon Valley's bank is having some issues as well too, where like, you're especially in crypto, like crypto is like crazy in the amount of like TVL in these banks, the deposits in these banks, right? And it's less crazy on the fintech side, but we're starting to see a cool off in the fintech sector, and especially the crypto sector, and people just pulling money out. And when you have to do that, the bank has to sell those assets to cover those deposits. Yeah,
deposits.
Yeah.
It's a interesting conundrum.
So with FRAX, the reason why FRAX will never go into the RWA business is that FRAX can never have any duration risk. We can provide duration risk by allowing people to lock up their assets, but FRAX can never take its collateral and put it into an asset where it's like locked up for 30 years, because the shifting dynamics of your supply expanding and contracting constantly put way too much stress on you being able to redeem at any moment. So, thankfully we've had the locks that have kept a lot of liquidity. God bless the locks. God bless the locks. Yeah. Have kept a lot of liquidity like ready to be sold into over the past 3 years. We never would have survived without it. But going forward, like moving to 100% CR, those locks are going to come off at some point, and maybe just people find it distasteful to relock again. And at that point, you're going to have to be like fully liquid all the time, and be able to draw down like 80% in a month.
You're still fractional, but the fraction is in between the risk-free yield and the swap facility.
Exactly. Right. Yeah. So, FRAX essentially is moving towards, like, you look at Circle, right? Like Circle's portfolio of assets that it has, which is probably similar to what FRAX is going to work towards by having the FMA. If FRAX gets the FMA, it essentially gets a bank where all the collateral that's in FRAX gets stored, right? And it no longer has to share it no longer has to like let Circle take all the payments or the interest that it earns on the collateral that it's holding. FRAX can just take it for itself. At that point, you have a big pile of cash that you're sitting on, like 20% cash ready to draw down at all times. And then you're in short-term securities, like either 1 month or 3 months short-term securities that like have a really, really, really illiquid market. And then you have no duration mismatch, right? You can take an 80% drawdown in a quarter and be totally fine, because your bonds will just they'll just hit their term, and then you'll get your money back plus a little bit of interest, and you can pay it back out. But if you have these like super long dated 15-year locks, you're screwed.
No, shit out of luck.
Yeah. Remember, we're at the end of like a 50-year bond bull run, and it's maybe turning. So now's not the time to have that duration mismatch.
But you know what time it is?
What's that?
It's time to wrap up the show.
Yeah.
Do you want to close this out?
Yeah. This has been FRAX in Review. I'm Sam, and I'm joined by Dave. You can find me at traders_insight. And where can they find you, Dave?
They can find me at DeFi Dave 22, and make sure you hit that bell button. Get all the latest alpha from the Flywheel fam. Hit the subscribe button. Follow us on Twitter at Flywheel DeFi. Hit us up on Telegram at Flywheel DeFi, and subscribe to the Substack down below. The link. Hit it. Thank you. See you next week.
Peace.